Hey guys, Pips here, and today I'm going to be continuing my Kucoin trading series. Now, the first one I did tell you how to trade on Kucoin, no KYC, with leverage, with up to 10 times leverage. Now, on this video, I am going to be showing you the trading bots because I know that is a hot topic, and that's something that you guys have really been requesting. Alright, so first of all, so when you look at Kucoin, it is a little confusing. If you're anywhere at all, this might not be up here, so just press the Kucoin and it'll bring you to the home screen, which we're already at. And then you go to trade and trading bot. Now, mind you, this takes money from your trading account, so make sure you have money in there. So you'd have to go over to your, just to show you how to put money in. So let's say it's in your main account and you want to put in USDC. You would, or Tether for instance, say you wanted to transfer money in, you could do this into your trading account and you'd type in 1.1. Now, I'm not going to put $1.1 in because that's pretty, not the smartest idea. But anyway, you got USDT, and then you'd put it into the trading account. So then you check here in the trading account and it would show that it's in there. Mind you, all of my money is actually in my margin account because that is where I do all my trading. And if you're wondering why I don't currently have any money in my trading account for the bots, it's because I figured out I could actually outperform them. And that the trading bots are actually better for larger amounts of money because you can, first of all, the trading fees don't really cut as much into your income because with each trade that the bots are taking, it does charge a trading fee, and when it's these small moves, unless you have large amounts of money, it is cutting into your profits. So do keep that in mind when you are doing this. So all right, now let's go to trading bot without further ado. All right, so here we go for bots. Like I said, I don't currently have any running. So as far as the bots, I did have -60. Now the reason for that is because I did get into a new cryptocurrency and then it just kept dropping. So then eventually I did cut my losses, and that is why that happened. Now I did since make that money back from spot trading, well, from margin trading anyway. But anyway, without any more waiting at all, no more delays, let's just go into what the bots are. I'll explain the risks with each one and the benefits. Alright, so spot grid. What this basically does is it creates a bunch of buy limits and sell limits. Sounds pretty simple. Now what happens is, so for instance, right, let's say we have this chart, right? And it would basically, so we would take, because price is here right now, right? It would make a bunch of sell limits and a bunch of buy limits. That's just to show you what it would look like. Now these would be evenly spaced apart, and these would all be sells. Let's make them all red. And now I'm going to do the exact same thing for the bottom side. Now, these aren't going to be perfectly spaced out, but in the chart it would actually show this. And there we go. Now, basically, it doesn't necessarily have to be the same amount on each side, because what happens is it takes 2 levels. Now, I'll use a regular white line this time. Let's see, let's say it thought that it was going to trade between, let's actually make that a different color. Say it thought it was going to trade between these 2 levels. Basically, there'd be all these red lines all the way up to here. And then it thinks it's going to trade down here, right? So basically what would happen is, now ignore that, that's just the line for the quarters theory. So basically what would happen is there'd be a bunch of blue lines all the way down to that gray line, and then there'd be a bunch of red lines all the way up to that line. Now what happens is anytime it activates any of these entries, let's say it goes up, show you this, because better to show you than explain. Let's say it picks this up, what'll happen is it'll actually delete this, and then it would create another buy limit where the price previously was. And so the price is now currently here because the price is currently there, and then when this entry gets activated as well because it goes up more, so our price is, and then there is another buy. Now it does work the other way as well. So let's say it then drops. Let's say it even drops too. What'll happen is these both get picked up. Price is, and then these would become sell limits now. Now it does this back and forth. Now the idea is that the space between these lines basically makes it so that anytime it goes back and forth, you make a very small profit each and every time. So it might make you a couple percent every week at most. It won't really make you too much, but the only risk that is associated with this is that let's say it drops below this line. So it drops all the way down here. You still are, now you're holding on to all of this Bitcoin. In this case, 100% of your account at this point would be in Bitcoin, because as it picks up more and more orders, it takes more and more of your money and puts it to Bitcoin. But as it goes up, it takes the Bitcoin and turns it to dollars. So either way, so let's say it goes down all of a sudden, what'll happen is it will take, and let's say it actually keeps dropping, it just keeps dropping. Now you just lost a bunch of money because you're still holding on to that Bitcoin and without any of the upside. Now, the other instance that could happen is price goes up here. Now, because the Bitcoin's selling at each level, as soon as you get to here, you're no longer holding on to any Bitcoin, and it's just US dollars. Now, when the bot is outside of these two parameters, it no longer does anything. It still is active. It just doesn't pick up any orders because there's no orders to pick up in that area, because you set the parameters ahead of time. Now, if you think that's a bit confusing, it's okay, because it sets the parameters for you, and you don't have to worry about the parameters because they probably have a better idea of what the market is going to do than you do, because they have a full team to do this with. Alright, now I'm going to go over the next one, which is the futures grid. Now, basically, it is the same thing. The only difference is instead of going both buy and sell, it only does buy limits or sell limits. Now, I don't really suggest this one because it is very risky, because there is a lot more upside than the other one, but it's making these, if it's consolidating for a while, it's like holding on to currency. So if you're going to do this, you might as well just hold on to regular currency at that point. So I don't really suggest the futures grid. Now, this is my favorite, the smart rebalance. This is actually a very cool one. And basically the way it works is, now let's say if I went to my watch list, for instance, now these lines just basically mean that something big is happening on these charts. It doesn't mean anything good or anything bad, for instance. It just means that something is happening, something big. And I don't necessarily watch those charts all the time, so that just tells me to check them out. Now, let's say I think, all right, some of these coins are about to be going up, but I also don't want to just put all my money into one coin. What do? You use the smart rebalance. And what you do is, I'm actually going to make one for you. So you customize. Now let's say I want to put in, I'm actually not even using anything from my watch list, because I don't want you to think I'm actually suggesting anything. I have absolutely no idea what that is. Let's put it in there. Put this in here. I'm literally just putting a bunch of stuff in here, right? let's say I was like, hey, these look like some good ones. Now, I do suggest you do your own due diligence. I'm not suggesting any of these projects. I don't even know what they are. Now, here is the only important part about this that you need to know. Now, you could have all these cryptocurrencies, but hey, what happens when the market goes down? It'll just liquidate positions and put them into other positions, whichever one falls the quickest, and that increases your risk. Well, what if you had a cash reserve to put more money into these crypto coins that won't go up or down? I introduced to you the USDC, which is the Coinbase US dollar coin. It literally stands for United States dollar coin, I believe, but I'm not completely sure on that. Sorry, it's United States dollar circle. It's circle. That's it. All right, but yeah. Anyway, what it does is it Oh, my bad. I completely forgot to. Let's just add in a bunch of stuff again. Confirm 7. So yeah, let's say I wanted to do this. Now here's the cool thing. We can make it all equal, but here's the problem with that. All of these have different market caps. So I could do by market cap, but then Bitcoin has a rather significant amount of it. And why would you want all of your money in Bitcoin? And that is why you do the AI balance, which it's very similar, but it's smart about it because, USDC, it actually gives it 19%. And I'd actually suggest giving USDC even a little bit more. But anyway, this allows you to get into all these different crypto coins, which hedges your losses in one coin and makes you more money in another. And now I'm going to actually give you an idea of what happens when you have one coin go up and a different one go down. All right, so let's say, for instance, Bitcoin drops. Let's say Bitcoin drops, right? Now, this is by basically, it's almost like a market cap, right? It's like when the amount of coins goes down on a project, all of the coins are now worth less. So it's kind of like the same thing. It's just all the different coins are worth different values. So any one of them can fluctuate the total amount. That's on smart balance. Now, what'll happen is, let's say Bitcoin goes down, right? It just flops. Let's say it goes down, for instance, let's say instead of 65%, it's now worth 60%. Now, this is where the smart rebalance bot comes in, because you could just buy all these different coins and, set some percentages based on the amount of currency. Now, that's dandy and all, but wouldn't you rather it, give you more money and make it so that you can turn that money in and automatically automatically put the money into the more stable stuff as it goes up? So what'll happen is, let's say Bitcoin drops, what'll happen is USDC will actually take money, because USDC will no longer be 19%, now maybe it's 23%, and it'll take into, and it'll put into Bitcoin, and actually whatever else drops, because this is for all the coins. Let's say Bitcoin is now worth 60%, it'll make sure that all the coins are as close to their original percentages as possible. So when coins drop, you basically get more of that coin, and when they go up, it sells them, and guess what? Guess where it sells to? USDC, as well as any other positions that drop, because then you can pick up more positions and make money at the same time. And the only way for you to lose money on this bot is if all of the coins drop to 0. First of all, that's the only way for you to lose all your money. The only way for you to go down in value is if all of the coins overall, based on their percentages, go down more than maybe some of the smaller ones go up. Now that's okay, because remember, cryptocurrency, especially some of these more stable ones like Bitcoin, will keep going up overall, because that's just how the crypto markets are. Maybe Bitcoin drops down to a few thousand. Maybe it drops down like 8,000, but overall it's gonna keep going up, because it is the OG crypto. Or for instance, Ethereum. Let's say Ethereum drops back down to 2,000. It will keep going up because it has utility and so on. So it just helps you hedge your bets by making it so that instead of being in just 1, 2, maybe 3 coins, you're in maybe like 10. Though the more coins you put into it, the bigger the minimum balance will be. So just be warned on that. And you'll need at least 180 some odd dollars to start it. So just have the money ready, and I suggest putting in larger amounts of money because it, again, every time it does rebalance, it will charge a fee, and that could cut into your profit if you don't have more money. Now let's go into dollar cost average. This one's pretty simple. Let's say once a day, at the open of each candle, it buys, or not even at the open, but just at a set time. But let's say, just for simplicity's sake, that it buys Bitcoin or any coin, for instance, at the same time every day. So let's say you think this is the dip. You start the DCA, dollar cost average spot here. So you buy here, then you buy here, you buy here, then you buy here, then you buy here, and then it keeps dropping. But that's okay, because let's say Bitcoin then goes back up, or let's say it gets back to your starting area, and you're like, all right, I want to turn the bot off now. Now anything after this is all profit, because remember, you didn't put all your money in at once, and this will actually automatically shut off if you no longer have any money for it to put in. It's because this is a bot. This is a bot that you actually have it take from a set area. So whenever you run out of that money is when it stops putting money in. And then you can also set how much money you put in every day. I don't know if you can put certain amounts in for each days, but it's a pretty cool one. All right, the infinity grid. Now this is one I'm not very familiar with. So you do in fact have to have the app to use it, which is why I haven't really tried it. So I would suggest trying that one out, or researching that one. I'm sure other people have probably checked this one out. I personally haven't. I just wanted to show you guys the smart rebalance, which is my favorite. Remember, this is long term, so if you are going to do the smart rebalance, make sure you do hold on to that stuff long term, and then maybe you can make some money in the long run. Alright, so yeah, these are all the bots. So on a scale of 1 to 10 on how risky they are, spot grid's probably like a 6 or 7, depending on whichever cryptocurrency you put on. Futures grid is like an 8. Smart rebalance is like, it's probably a 2 or 3. It's the least risky out of the bunch. Dollar cost average is probably like a 4 or 5, just because it is moderately risky, but you are overall going to get a better price than wherever price is going to be, as long as it keeps going up. And then infinity grid, I'm not completely sure on that one. See, I'm gonna have to check back, and if I find it interesting, I will make another video on that, as well as if I find bots in the future, and if I have anything more I want to talk about on Kucoin, I will make another video on it. I know this was a longer video, so I hope you did enjoy it, and if you did, please like and comment, and tell me what you want me to do in my next video, and I will be doing a video on that as well, if I find it interesting. Alright, see you in the next one.